The focus of today's session is to talk about how an entrepreneur, a female entrepreneur, can get funded in MENA. So Ramez, handing it over to you.
Sure. My name is Ramez Al-Sarafi. I'm the CEO of Flat6 Labs. We are managers of startup accelerators and seed funds in the MENA region. Started in region 2011. Then shortly after that, we expanded to Saudi, the UAE, Lebanon, and Tunisia, and most recently in Bahrain. We have invested in more than 270 startups across the MENA region. We have more than $40 million of committed capital invested in our seed funds that we are investing in these startups as well. And as we're in the Global Women's Forum, I'm very proud to say that actually half of the team, the Flat6 Labs team, actually are female members as well. So this is something that I'm very proud of.
Thanks, Ramez. Anwar, do you want to talk a little bit about yourself and your fund?
Of course. So my name is Anwar Amle. I'm a founding partner at Ibtikar Fund. Ibtikar is, of course, innovation in Arabic. We are Palestine's only active venture capital fund. We started 5 years ago. We invest in Palestinian tech startups at their earliest stages, so from ideas, helping them grow, we couple our financing with hands-on support. And we're doubling down on Palestinian entrepreneurs and hopefully raising a fund that is 2.5 times larger. We're currently raising for that, so hopefully that will be announced soon.
So just one follow-up question on this. Can you let everyone in the audience know what is your average ticket size per investment that you do? So if people are reaching out to you, they have a sense of what they're looking for.
Yeah. Okay, so shall I still speak into the microphone for those of you? Yeah? Okay, awesome. We'll use the mics. So for a seed to late seed, we're doing about $500,000, max $1 million. That'd be our first check size. We don't typically want to write smaller than $500,000 checks. And then for a Series A, it would be 2, 3. We could go up to 5 if we have a huge amount of conviction. And then I guess a large follow-on at the B, which is rare, and we certainly don't. Would highly unlikely make an initial investment at that level. Would probably be about a 5. We've done as high as a $7 or $8 million check in a single check. So that's sort of our spread.
Amar? So our average is $200,000. We start earlier than that in partnership with accelerators. Sorry, am I too quiet? So we invest about, then it'll be too loud in the mics, $40,000 through accelerators. So those are very small investments to test ideas. And we can go up to $1 million in a portfolio company, again, through several stages, sort of like Beko does.
So a little bit earlier stage than these two. So we invest, our cash ticket size is between $30,000 to $50,000. It depends on the city and the market where we are because they vary. But it's between 30 and 50K for a maximum of 10% of equity. And we also have follow-on funding, like almost 1/3 of our funds are usually allocated for follow-on funding. And we invest up to $300,000 in follow-on funding, matching other investors as they come in and invest in our startups.
So I think what you've seen across the spread of investors, here's a sample of investors. There's some of the top investors in the market, but you sort of see the spectrum when you're working in venture capital. You'll have very early stage investors like Flat6 who are starting with a $30,000 to $50,000 check. You'll have investors like Ambar who are doing around $200,000 for their first check, and you'll have investors like Danny who are doing $500,000 to $1 million, and then going up further. And then once you guys get really large, you have investors like IFC who are coming with a $5 million check. So that's sort of the spread. So the goal is to be able to access funding at whatever stage you're at to finance that growth. So I'm going to move a little bit. Ramez, this question I wanted to hear from you because you work with very early stage entrepreneurs. What are the key things you need to do to help them to become investment ready? And for the entrepreneurs in the room, what should they be focusing on at that stage?
Sure, I think I'll start with the latter part of the question, then I'll come to the first part. So we mainly pick teams. At this very early stage, there's almost nothing to show but like passion and individuals who are passionate about their dreams and what they want to achieve. So we can like go into different formulas of like what we can pick from and how we can choose startups. But at this very early stage, it's all about the individuals and their passion. And one thing that we learned very early on doing this, that you can almost teach entrepreneurs everything when it comes to doing business and building a product and getting into a market, but you can't teach them passion. They have to be passionate entrepreneurs, and this is a very important aspect of how we pick our startups. Answering the first part, the entire accelerator program actually is designed for this. So the reason why we don't just hand out capital, we could have just written like $50,000, $100,000 checks to the startups, and we just become a traditional VC in that sense. But the reason why we are doing the accelerator program is actually the value add that comes with this program, and get these startups ready to raise their rounds after they after they are accelerated in the program. And usually somewhere between 40 to 50% of our startups after graduation, they go and receive full-on funding from other investors. So actually, getting the startups investment ready is the entire thesis of Flat 6 Labs and how we invest in them.
It's fascinating to hear. I'm going to actually jump to Danny. So he's looking primarily at team and like at passion in the team. When they come to you, they're further along in their journey. So what are you looking for in addition to what Ramez has looked for?
So, I mean, you'd be surprised, by the way, even at the pre-AA, it's 90%, if not 100% team. There's still very little traction. They might have just about stumbled across product market fit, but most likely not. Actually, I guess the first $2 million that we'd invest is what we're happy to stake as a bet to prove product market fit, but we're still betting on the team. Now, the question is, in addition to what you said, I think the problem with passion is, and we've been doing this for 9 years, and we're learning. So if we had a crystal ball, we'd be in a very different place. But I think when it comes to passion, it's an interesting one because, and we were looking at some data just last week with the Kaufman Fellowship about the traits of the most successful entrepreneurs, and it's a very, very difficult one, but let me take a stab at it. So we actually spend most of our time speaking about one thing with the founder or founding team, and that is if they can really walk us through, and I know this may sound simple, but it's actually not, what the vision, what is their vision, and how they intend to actually execute on that vision. And even if it's a complicated white space where no one's ever gone there before, that makes it a bit more difficult. Leave that aside. If we're not able to really understand it and get excited by it and want to leave our jobs and work for that entrepreneur, then it's probably something that we're not going to back. But again, it's also not static. It's a dynamic process, right? So the first time we meet with the founding team, we spend time, we document the process, and we think, okay, these are the pros and cons, right? We don't say what we like, what we don't like, because then it becomes emotional. You want to take the emotion and the bias out of that relationship, out of that exercise. And so when you do the pros and cons over time, hopefully if you're plotting a graph of the pros and cons, you're learning more and more about the team, their vision, their ability to think really quickly and re-articulate things and learn. And that delta, that rate of change, is, I think, for us, if I look back on like the most successful male and female entrepreneurs, we have female entrepreneurs, very successful ones in the portfolio, it's that rate of change in their ability to think at the speed of light and execute at the speed of light, but while having a very firm vision, right? You don't want to mess around on vision.
Right. Thanks for that, Danny. I'm going to go to Ambar now. So when you're looking at startups in the region, you have a sizable market that, Ramez and Danny are targeting. When you're looking at a market like Palestine, the market's significantly smaller. So how are you thinking of the startups in the region, and how do you help them grow when the home market's not as large?
Of course. So yeah, we're actually a lot smaller. Let them make the announcement. Okay. So should I just continue? You can still hear me? All right. So our GDP is about 10 billion versus yours, which is much higher at 302, and his at 414. So our market is way too small. None of our companies focus only on Palestine. And the way they look at it is Palestine is our test market. It's where we start. We create the product there. But very quickly, they start looking at other markets in the region, if not wider. So for example, we've had companies that have expanded not only to the UAE or Egypt, but also to Chile, to Latin America, through Chile, and to the States. And so when we look at a company, just like both of these investors, we're looking at the same things. We're looking at which, those sectors that are promising. Can this company really do it? Do we see that vision? Do we see that passion? And are they able to execute it? And one thing here, because we're talking a lot. You, for example, mentioned the ability to make decisions very quickly, and that is one thing that I've seen that is a bit different between men and women. We like to study things, and we like to look at every single angle. But really, when you're working in these startups, you need to think at the speed of light and make decisions super quickly, and be able to stand by those decisions. So that's one thing. When we're talking to, of course, you who are looking for funding, this is one thing that you need to really be able to practice and do very quickly.
And that's where I think the investor comes in as that sounding board member that doesn't over-push. You never want to over-push the entrepreneur, but is basically there to make sure that, if someone is a bit slower in their comfort zone, both genders, right, in decision-making, that we're there to basically push them and encourage them and help them ultimately be, I think, the best version of who they can be.
So what I'm hearing from across the three of you is it's not just about investing, but it's also supporting the company through that growth. So when you're looking for the entrepreneur, you're looking for someone who's able to grasp that learning and grow with it, whether it's as early as what you guys do or as late as what Danny does. So one of the events that's going to happen at this conference is we're releasing some research tomorrow that is going to show how accelerators can work better with women startups. And for those of you who are data geeks and want to dig into that a little bit more, there's a session tomorrow at 1:30. It's on the other side in the Mina As-Salam Hotel, so do attend. And so what we found with this research shows that women entrepreneurs are applying just as frequently to accelerators as male entrepreneurs are. Women-led companies are applying just as frequently. And they're getting selected into accelerators. But somehow that's not translating to capital raised. So I just want to hear from you guys just examples of where you've seen strong women entrepreneurs, where you've seen women entrepreneurs make this change, and what are things that you as investors can do a little bit more to better support female entrepreneurs, whether it's having women in your teams, which I know all of you do, or whether it's working more aggressively with female entrepreneurs, telling them to be more aggressive. I don't know what the answers are, but I'd love to hear from your experiences. What are things that you've seen that's helped women fundraise? Because what we're seeing is they're getting accelerated, but they're not accessing the funding. So strategies that you've seen. I'll start with you, Ramez, because I know you guys have been working quite proactively on getting women entrepreneurs investment ready. So are there specific things that you've done that have worked?
Definitely. I don't think the best idea is to do like quotas or percentages, because I think this would be the worst for everybody involved, including the investors, of course, who trust us with their capital as well. But actually, we figured out that there is a lot to be done in terms of the outreach before the program. As you mentioned, we almost like 1/4 or 30% of the applications that come into our accelerators, they are female-led startups. But actually, this percentage drops to like 15%, up to 20% when it comes to the selections. So actually, the one that we end up investing in are significantly less than the 30%. So we figured out like there might be like a problem with or a challenge when in terms of getting them ready to present and pitch and actually how they think about their business. And this is why we started an effort. We started in Egypt actually with the IFC and the UK government in Egypt. It's a program called Start Egypt, which is funded by the UK government and the IFC. And this program, big part of it is all about engaging with female founders and getting them inspired to come up with their ideas. We launched a series of workshops. We conducted around 15 workshops around Egypt over the last couple of years, attended by more than 500 female founders or want-to-be female founders. And many of them actually, they ended up applying to join the incubation program and acceleration program after that. And it works. It works when you have female founders who are successful talking to potential entrepreneurs as well about their challenges, about their passion, about what they want to achieve, and their experience in general. Having also female mentors on the program, and by design, we try our best to actually match female entrepreneurs with female mentors, and also it works. They look up to them. So just from the beginning, like having a successful female role model is very important. And also it comes with our team, as I mentioned, like our team, we have like 52 people and we have 27 team members in the Flat 6 Labs team. So actually almost more than half of our team are female members. And this, again, definitely helps when on the other side you have female investors who are actually interacting and working on the deal with the startup.
Amber, any thoughts from you?
Sure. So our team of 3 is actually 2 women, and what I've seen is that women entrepreneurs, female founders that want investment, come to us much earlier, to Reem and I. Reem is our CFO, and this is even before they officially approach Iptikar. They help us understand their business. They come to us to really help them with their financials, with their pitch deck. And so there's a lot of preparation before they even actually present to Iptikar, which I think is really exciting, because it shows that, I think when you have women in your management teams, the female founders really feel a bit more comfortable. And I think that's very, very important. I think we as an industry really have to think about that, and really having the role models at the top levels, so that not only is there that role model, others feel that they can make it, but also because women feel more comfortable approaching us. And I think that's super important. The second thing, and which is one thing that I noticed at Rise Up, is that Rise Up has daycare. So women are able to attend that conference and not worry about what am I going to do with my kids? So especially when you're coming from abroad, that's very, very important. You have to be able to access these conferences, and at times it's really quite difficult to leave your children, or maybe you leave one and you don't leave both. So it's a management. Flexible work hours. These are all things that really are attractive to women and make it so much easier for us to be part of all of those events and all of those activities.
I got to jump in here. So our data contradicts your data. Before I talk about the data, so first of all, we're about 15 people at Beko, half female, which is pretty cool. Not by design, they're just awesome people. And then we have a full female investment team. We have a full female, and that's 2 people, data team. So all of the data work that we do is led by young ladies. So we have a huge participation of females within the firm, and I think that helps us. Now, the data, so we have, let me just set context here. We receive upwards of 1,000 applications a year, about 1,000 to 1,100, and we make 5 new investments a year. So we invest in less than 0.5% of what we see. However, if you look at the data over the last few years, we receive about 5 to 7%, depending on which year you're looking at, applications with a female founding team, like at least one female in the founding team, right? Whereas we actually ended up investing in 17% of our portfolio, so we're actually accrued up the female.
Fascinating.
It's pretty cool, right?
Yeah.
So it's like 3x. So I guess the question is, how do we open up the funnel and get more female founding teams applying to all of us,
Right.
us certainly, so that we can continue to accrue up 3x and fund a lot more female entrepreneurs.
So the data that you share is actually true globally. When you look at the investment pipeline, it ranges between 5 to 9% depending on which market you're looking at. I think MENA, it's 6% of investment dollars go to women entrepreneurs or women-led companies. The challenge is at the very, very early stage when people are applying with a business plan to accelerators, we see a lot more women founders. But even getting that first investment check is not happening. So by the time, but the time they come to you, the fact that your market is seeing 67% in your applicant pool, I'd say that's what we're seeing in the market. The nice thing is you're flipping that, which we never see. It always sort of like goes further down because, as you said, you're investing in 0.5% of what you see, and that's true for most venture capital firms. And I think the other point that I'd like to add, so I've been spending a lot of time with women entrepreneurs, and a common gripe that I hear is, we didn't get funded because we're women. And I don't think that's true, right? I mean, I think maybe a little bit, yes, but there are just so few women entrepreneurs, and everyone's facing fundraising challenges, right? Because if you're going from 1,000 companies to 5 getting funded at the, Series A stage, the funnel just narrows and narrows as you go later down the funnel. So I think it's challenging for everyone. It might be proportionally more challenging for women just because there's so few women entrepreneurs around as role models, as mentors, what we can see. So, but I'm glad to see that you're reversing the funnel.
So am I.
Yeah, that's great. So I know we have just a few minutes left, and I wanted to open the conversation up to see if there's anyone in the audience who has a question or a comment. If you don't, we can jump back into questions. Please. Just introduce yourself before.
My name is Samar. I'm a co-founder of a startup called She Is Arab. It's a social enterprise. So I just wanted to get your feedback about social entrepreneurship, and are you funding any social enterprises? What's the, view for it?
Thank you, Samar. Does anyone
I can answer this because actually we're doing something very specific as well in regards to this. We found that the social impact related startups are less frequent to be funded, especially in Egypt and emerging markets. So what we did is that we partnered with the IFC, where we availed some grants for social impact startups that went through the accelerated program. They are not social enterprises. They need to have like a for-profit business. But actually, if they meet some social impact criteria, we'd give them a grant to be able to accelerate their growth. Usually it takes a little bit more time to build the product or actually get the market action that they need if they have this kind of social impact angle. And of course, it fits very well with the IFC objective as well when it comes to this. So this is one thing we did.
One of the things to also think about for social enterprise is venture capital the right funding stream for your business, right? Because they are alternate funding streams that are not necessarily venture capital. Venture capital is looking for that hockey stick-like growth. So if you fit that mandate, it makes sense to interact with venture investors. But then there's also entities that provide debt capital, especially if you're working towards financially sort of profitable business line, and so that'll finance your growth. There are banks that do that. There are non-banking financial institutions that do that. I have colleagues in the room that work on that line of business, so they're right behind you, so you should reach out and speak with them. But yeah, next question.
Hi. My name is Muna Bakar. I'm from Oman Development Bank. My bank is 100% owned by the Omani government, and we are the pioneers in Oman in terms of financing the SME projects in the country, along with the microfinance and the project loans. My question is, like, when you grant the loans and when you fund such projects for women, do you provide non-financial services as well to them when it comes to, like, training or to cover their risks? Especially like for women, the startups, they face lots of obstacles, they face lots of problems. So what is your role? What do you do in this term? Thank you.
So I think all of us provide a lot of support to our companies. It's not officially training. So for example, we meet our companies every other week. And every other week they sort of report on certain things. We track how they're doing very closely. And as needed, we bring in experts. So for example, maybe they need a US expert. So then we hire somebody that will work with them or work with the portfolio completely. And so we make sure that, yes, when help is needed, help is there. And our team is very, very hands-on, supporting as much as we can.
Yeah, I mean, we have a value creation team in the office that the minute we make an investment, actually before we make an investment, we sit with the founding team and anyone else from the senior leadership team that they choose to participate in this session, and we basically build a 100-day plan, and that 100-day plan is everything from talent, helping them find key hires, to getting things approved for the company to basically subsidize their further education and so on and so forth as members of the board, to make sure that there's, from a governance perspective, it's done in the right way, all the way through to scaling them cross-border, helping with business development, and then from then thinking about the next round of funding, not only for us, but with our peers in the ecosystem. So we do a lot of work. I don't think there's a day that goes by that I don't have at least a WhatsApp chat that's a meaningful chat, not just like, hey, how you doing? With the folks that any of us partners at Beko speak to, and that we spend time with these founding teams. I would say almost every single day, and it's varying degrees of intensity, but it can become very, very intense. But just to answer your question on investment, we have a very specific strategy that obviously this is sort of the value chain, the stage value chain. We're at the end of it, and so we we basically make about 15 to 20 max investments. So diversified, yet we concentrate behind the winners. So we will press very, very hard behind about 5 or 6 of those. And those are the ones that hopefully go on to build, the Karims of the world, not just the region. So we're finding that now, and our latest fund, that we're having a lot more entrepreneurs based in the region that are actually building global businesses. It could be global emerging markets, which is still huge, right? You have Middle East and Africa, Southeast Asia, Latin America as sort of 3 massive pockets where if they build something, particularly in Egypt, which is a very difficult and populous market to build in, very difficult from multiple, financial inclusion, infrastructure, and so on and so forth. It's very, very difficult to build. But if you can build it in Egypt at scale, we think that you can take that to all these different pockets. Especially if it's a white space and you have time to race and get funded and take it to those different places. But we have companies in the portfolio that are building global businesses, that are innovating and reshaping an entire category across the globe. So I think if we fund them well and we support them to do all the things that what I've just said that we do, not just for the 100-day plan, but beyond that, I think that's a huge amount of support. We're very active.
Yeah, and that's coming from the investor who actually invested very early in Kareem, so he's speaking from experience. I know there are more hands in the room, but I got a warning saying that we have 2 minutes left, so one question and very quick responses, and then we'll wrap up.
Come here, because we can't hear you anyway.
Yeah, hi, thank you. My name is Rasha Al-Qadi. I'm an architect and interior design. I have my own design business, but this is not the question. The question is, I'm trying to have an initiative. It's a cultural and historical event in Egypt, and with such initiatives, it's not like an e-commerce or a service. It's more like it's a more wide initiative that includes a lot of different sectors in the region. It's a problem to get a fund for such an initiative where you are not having direct revenues or profits out of these whatever events or initiatives. So how we can support such cultural initiatives that will have a profit on the long run, not the short term. It's just something that would have a profit or benefit, but on long term plan, not a short term plan. Thank you.
Thank you so much. I'll take that one. The thing to think about is these guys are funding venture capital. So they're funding more businesses that have a pathway to profit. What you're looking for is more where the benefits are not just financial, where they're cultural benefits and they're things that might not be measured in a tangible way. I think you'd be looking more at grant funding, and I think that would be a different universe. Happy to have that conversation later, but there are specific pockets that would fund those type of initiatives, but it wouldn't be our lovely panelists. Thank you all. I want to take this moment to say big thanks to our 3 speakers, Danny, Amber, and Ramez. You guys have heard them, and feel free to reach out as needed. Thank you.